Fantastic. Okay. And then we need to share. Hold on, I'm still getting up and going here. Just need a minute. Hmm. And here we go. And do one more minute here. Do 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 do. Copy. Do 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 do. Ba-do-boo-boo. Scooby-doo-boo. Scooby-doo-boo. Doo-ba-doo-boo. One more thing. Oh, for Pete's sake. Do do do. Wait. Okay. 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 Boo ba doo. All right. And we got that all set up. Okay, we're ready to go here. Okay, so we're going to be reading the instructions. I'm just going to go ahead and read through the entire thing. Give commentary where I think it is necessary. But other than that, we're going to just grind through. There's about 114 pages. I don't think I'll read all of it, but we will see what happens here. Okay, so this would cover 1040 and 1040 SR instructions. You can go on the IRS website and just read through them yourself. But for whatever reason, people don't read instructions, so that's kind of the whole purpose here. Just to get information out there and make sure everyone at least knows, hey, what's going on or whatnot. So I don't know. I will be doing my personal taxes in the next, I don't know, month or so. So it's always good to be informed about any changes that go on. Maybe there is something that changed, maybe not. We don't know. So yeah, it's always helpful. So that's kind of where we're at. So this is a win-win situation. So first, what I like to do every year when I read these instructions is I go ahead and look at the changes, see what's new. Here's the website, see irs.gov and irs.gov/forms for latest information about developments related to Forms 1040 and 1040 SR and their instructions, such as legislation enacted after they're published. Go to irs.gov, Form 1040. They have a free file. Fast, safe, and free way to prepare an e-filer taxes. Ooh, well, look at that. Look at that. So, one thing that I always like to do is just read through kind of the helpful hints. I know everyone's busy and they have lots of stuff to do, but that's kind of where we're at. For 2023, you'll use the form 1040, or if you're born before January 2nd, 1959, you have the option to use 1040 SR. You only need to file Form 1040 or 1040 SR, none of the numbered schedules, schedules 1 through 3. However, if your return is more complicated, for example, you claim certain deductions or credits or owe additional taxes, you will need to complete one or more of the numbered schedules. Below is a general guide to which schedules you need to file based on your circumstances. See the below schedules for more information. If you e-file your return, the software will generally determine which schedules you need. So for example, if you have additional income such as business or farm or loss, unemployment compensation, or prize money award, Schedule 1, Part 1. Having adjustments, any adjustments to income such as loan, interest, self-employment tax, or educator expenses, Schedule 1, Part 2, alternative minimum tax, or need an excess advance premium tax repayment. Just go ahead and do Schedule 2, Part 1. Other taxes such as self-employment, household taxes, additional tax on IRAs, or other qualified employment plans and tax favored accounts. Schedule 2, Part 2. Claim a non-refundable credit other than child tax credit or the credit for other dependents, such as a foreign tax credit, education credits, or general business credit. Let's go ahead and Schedule 3, Part 1. Can claim a refundable credit other than earned income credit, American Opportunity Credit, or additional child tax credit, such as the net premium tax credit, Schedule 3, Part 2, sorry. Let's see, okay, so that's page 3. Okay, so then they go in and they talk about the Taxpayer Advocate Service is here to help. So let's see. Oops, hold on. What is that? Okay. That's weird. Okay. Do. Okay. What is the Taxpayer Advocate Service? The Taxpayer Advocate Service is an independent organization within the IRS that helps taxpayers and protects taxpayers' rights. Hold on, I gotta clean my glasses. I can't see anything. TAS strives to ensure every taxpayer is treated fairly and that you know and understand your rights under a taxpayer bill of rights. What can TAS do for you? TAS can help you if your tax problem is causing financial difficulty, if you tried and have been unable to resolve your issue with the IRS, or you believe the IRS system, process, or procedure just isn't working as it should, and the service is free. So, hold on, what is that? What's going on here? Whoops, hold on. Whoops. Here, I'll put you in the background. Restore. There we go. Let's see. And if you qualify for assistance, TAS, you sign to one advocate who will work with you throughout the process and do everything possible to resolve your issue. TAS can help you if your problem is causing financial difficulty for you, your family, or your business. You face or business facing immediate threat of adverse action. You've tried to contact the IRS, but no one has responded, or the IRS hasn't responded by the date promised. TAS has offices in every state, the District of Columbia and Puerto Rico. To find your advocate number, go to taxpayeradvocate.irs.gov/contact us. Download the publication 1546. Taxpayer Advocate Service is your voice of the IRS. If you do not have internet access, you can call the IRS toll free at 1-800 tax form. Ask for a copy of publication 1546. Check your local directory. Do people still have local directory? I don't even know what. I don't think they do. Call TAS toll free at 877-777-4778. How can you learn about your taxpayer rights? The Taxpayer Bill of Rights describes 10 basic rights that all taxpayers have when dealing with the IRS. The TAS website, taxpayeradvocate.irs.gov, can help you understand what these rights mean to you and how they apply. These are your rights. Know them, use them. Okay, so then they also have the low-income taxpayer clinics help taxpayer. Low-income taxpayer clinics are independent from the IRS and the IRS Advocate Service. They represent individuals whose income are below a certain level who need to resolve tax problems with the IRS. They can represent taxpayers in audits, appeals, tax collections, disputes before the IRS and in court. In addition, they can provide information about taxpayer rights. Services are offered for free or a small fee. So there you go. Suggestions for improving the IRS. Ooh, well, that's interesting. I guess they allow suggestions. That's always good. That's wonderful. Taxpayer advocacy panel. Taxpayer have an opportunity to provide direct feedback to the IRS through the taxpayer advocacy panel. The TAP is a federal advisory committee comprised of independent panels, citizen volunteers who. Oh, wow, there's quite a bit of delay in my streaming service. Well, that's interesting. Well, I can tell you about the future. So if you have any questions, send them in chat. So, because there is a delay with my stream, that I can tell you about the future, I guess, apparently. Okay, so recap this page. The Taxpayer Advocate Service is here to help. low-income taxpayer clinics can help taxpayers, and suggestions for improving the IRS. So there you go. There's all three. Okay, so let's go on to the next page. Affordable Care Act, what you need to know. Requirement to reconcile advance payments of the premium tax credit. The premium tax credit helps pay premiums for health insurance purchased from the marketplace. Eligible individuals may have advance payments of the premium tax credit made on their behalf directly to insurance company. If you or your family are enrolled in health insurance through the marketplace and advance payments of the premium tax credit were made to your insurance company to reduce your monthly payment, you must attach Form 8962 to your return to reconcile the advance payments with your premium tax credit for the year. Well, there we go. The marketplace is required to send Form 95A by January 31st, 2024, listing the advance payments and the information you need to complete Form 8962. Okay, so there, that deadline is coming up in a few days, so yeah, so fill out those forms. Health coverage reporting. If you or someone in your family was an employee in 2023, the employer may be required to send you Form 1095C. Part 2 of Form 1095C shows whether your employer offered your health insurance coverage, and if so, information about the offer. You should receive Form 104095. Form 1095C. I can read by early March 2024. This information may be relevant if you purchase health insurance coverage for 2023 through the health insurance marketplace and wish to claim the premium tax credit on Schedule 3, Line 9. However, if you don't need to wait to receive this form to file your return. You may rely on other information received from your employer. So I'm guessing if your employer sends you information that says you have insurance, then just go ahead and file. That's what I think what it says here. Oh, wait a minute. What is that? Do I have a marker? I do. Look at that. Look at that. Ooh. Let's make that green. I just learned something. Okay, so from information on who is eligible. Okay, that's enough. Calm down, you. Stop it. Okay. Who's eligible? Who is eligible to? Please see instructions. Okay. So I'll just go ahead and read more instructions. We'll see how this goes. We'll see if I can get through that. Reminder, health care coverage. If you need healthcare coverage, go to healthcare.gov to learn about health insurance options for you and your family and how to buy health insurance and how you might qualify to get financial assistance to buy health insurance. Okay, in case anybody didn't have so if you didn't have internet access, you wouldn't be streaming this or listening to the stream, and you wouldn't be able to go to healthcare.gov. So yeah, I don't know. I don't know about that. Okay, so what's new? Let's go on to the next page. So this here, cannot hear you. This is probably the most important page that I usually read through every year. It's the what's new. Hold on. Oops. Can I hear you? Yep, go back to highlighting. Can I move this down here? Yeah, I can. Look at that. Okay. Wait. Underline. There we go. What's new? Let's see if I like, let's do highlight instead. Look at that. That's amazing. Okay. Okay. Due date return, file form 1040 by April 15th. Where'd my highlighter go? Highlight. Yeah, highlight. If you live in Maine or Massachusetts, you have until April 17th. Ooh, look at that. Okay, April 17th, because of Patriots' Day and Emancipation Day holidays. Well, look at that. Standard deduction amounts increased. Ooh. For 2023, the standard deduction amount has been increased for all filers. The amounts are single or married filing separately, 13,850. Married filing joint, 27,700. Wow, holy smokes. And then head of household, 20,800. Wow, those are some. The additional child tax credit amount increased. The amount maximum additional child tax credit has increased to 1,600. Holy smokes. Wow, that's quite a bit. New clean vehicle credit. The credit for the new qualified plug-in electric vehicles has changed. This credit is now known as a clean vehicle credit. The maximum amount of the credit and some of the requirements to claim the credit have changed. The credit is still reported on Form 8936 and Schedule 3, line 6F. For more information, see 8936. Previously owned clean vehicle credit. This credit is available for previously owned clean credits, clean vehicles acquired and placed in service after 2022. For more information, see Form 8936. So there's another form to read through. So if that works, hold on. I gotta take a break. Hold on, wait a minute. Let me figure that out. So go back here. Hold on. Yeah, that's right. Okay. New lines on Schedule 3. What? Okay. New lines on Schedule 3. What is that? Schedule 5 has been separated into lines 5A and 5B so that the residential clean energy credit and the energy efficiency home improvement credit report on Form 5695 have their each own line. New line 6M was added to report the credit for previously owned clean vehicles. Line 13C will be used to report the elective payment election amount from Form 3800. Credits for qualified sick and family leave wages paid in 20 for taken before. The credit for qualified sick and family leave wages paid in 2020 for leave taken before April 1st and for leave taken after and before October 1st are now reported on Schedule 3. So there's qualified sick and family leave wages from 2021? Okay, well that's weird. So, that's probably helpful. So here's some helpful information. Okay, alternative motor vehicle credit. The alternative motor vehicle credit has expired, so no more of that. Self-employed health insurance deduction. If you can take the self-employed health insurance deduction on Schedule 1, line 17, and you can't use a self-employed health insurance deduction worksheet in these instructions, you will now use Form 7206 instead of Publication 535 to figure your deduction. So figure that out. Qualified charitable distribution one-time election. Beginning in 2023, you can elect to make a one-time distribution up to $50,000 from an individual retirement account to charities through a charitable remainder annuity trust, a charitable remainder uni trust, or a charitable gift annuity, each of which is funded only by qualified charitable distribution. See publication 590B for more information. Increase in required minimum distribution age. Ooh, so if by any chance if you reach the age 72 in 2023, the required beginning date for your required minimum distribution is April 1st, 2025. So what the so if you turn 72 in 2023, you have until April 1st, 2025 to get a required distribution. So that's 59B. Insurance premiums for retired public safety officers. Eligible retired paid public safety officers can exclude from income up to $3,000 of distributions from their eligible retirement plan that is paid directly to them and is used to pay for more. Oh, up to $3,000. Oh, so if you're a retired safety officer, oh, there's more information. So we'll get into that. Let's see. Oh, look at that. Look at that. Exception to the 10% additional tax for early distribution. Hold on. Nope. Okay. So there's an exception to the 10% additional tax for early distribution. The exception to the 10% additional tax for early distribution include the following: distribution from a retirement plan in connection with a federally declared disaster. So if we got a guest here, that's my cat right there. He does cat things. I don't know. He may show up from time to time doing cat things. Okay, so going back to the exception to the 10% additional tax for early distributions. So you got a federally declared disaster, distribution from a retirement plan made to someone who is terminally ill. I mean, we're all terminally ill. No one lives forever, so I don't know. Do with that information as you will. Distributions to certain firefighters who meet the age or years of service requirement. So certain firefighters, I don't know who that is. Maybe ones that fight fires. Um, Direct file. The IRS has taken steps to implement a direct file pilot during the 2024 filing season. This pilot will give eligible taxpayers the option to prepare and electronically file their 2023 federal tax returns directly with the IRS for free. The direct file pilot will be offered to eligible taxpayers in participating states who have relatively simple tax returns, reporting only certain types of income and claiming limited credits and deductions. So that's a big deal right there. I'm gonna, what was that? Add a note? Oh, look at that, I can add a note. Okay. Free software options for doing your taxes. Why have millions use? Okay, so takeaway from what's new um, is the data return April 15th or April 17th. Standard deduction amounts increase. That usually happens every single year. The additional child tax credit amount increase. That's pretty awesome. New clean vehicle credit. Previously owned clean vehicle credit. Additional lines. Credit for qualified sick family. Alternate motor vehicle credit. Self-employment insurance deduction. Qualified charitable distribution. The increase in the required minimum distribution age. The retired public safety officers, the exception to the additional tax for early distributions, and then the direct file. Probably the most important thing that most people really care about is the standard deduction increased, the dates for when everything is due, and then the direct file. That's probably, I would say, about 90% of people that actually listen and file their returns. But anyways, that's the main takeaway from this page. Go to the next page. Free software for doing your taxes. So um, there's lots of free options for doing your taxes. People, for whatever reason, still pay um, for filing their taxes, which is fine. But there are free options, and I mean it's just basic math. If anyone can add things together, it's pretty easy to do. You just read the instructions, do some math, and go forward with it. So why have millions of Americans used Free File? Well, there's security. Free File uses latest encryption technology to safeguard your information. Flexible payments. File early, pay by April 15th, 2024 for most people. What the heck is that? Greater accuracy. Fewer errors means faster processing, quick receipt, get acknowledgement that your return was received and accepted. Go green. It's free. Faster refunds. Join the 8 and 10 taxpayers who get the refunds faster by direct deposit and e-file. So just do free file. I mean, a lot of good reasons why, but I don't know. Some people like to spend money, I guess, and do it, but it's literally it's free. So yeah. So free file. Do your taxes for free. If your adjusted gross income was 79,000 or less in 2023, you can use free tax software to prepare and e-file your tax return. Earned more, use the free fillable forms. Free File, this public-private partnership between the IRS and tax software providers, makes approximately a dozen brand name commercial software products and e-file available for free. 70% of the nation's taxpayers are eligible. Here, I'll say that again. I'll highlight that. I don't know why people don't use the free system. I mean, it's literally free. Um, just visit irs.gov/freefile for details. Free File combines all the benefits of e-file and easy-to-use software at no cost. Guided questions will help you ensure you get all the tax credits and deductions you are due. It's fast, safe, and free. You can review each software provider's criteria for usage or use an online tool to find which software products match your situation. Some software providers offer state tax preparation for free. Free fillable forms. The IRS offers electronic versions of IRS paper forms that can be e-filed for free. Free file fillable forms is best for people experienced in preparing their own tax return. There's no income limitation. Free file fillable forms does basic math calculations. Basic math calculations. So, like I said a couple minutes ago, if you can read and do basic math, you can fill the forms out yourself, or I don't know, go ahead, spend your money and pay for software, but it is free. These are the instructions. I'm not making this up. It's literally right here. Free tax help available nationwide. Volunteers are available in communities nationwide providing free tax assistance to low to moderate income, generally under 64,000 in adjusted gross income, and elderly taxpayers age 60 and older. At select sites, taxpayers can input and electronically file their own tax return with the assistance of an IRS certified volunteer. How to get tax help near the end of these instructions. For additional information, or visit irs.gov/VITA for a VITA TCE site near you. IRS is the gateway to all electronic services provided by the IRS as well as the spot to download forms. So the free tax help available nationwide, um, that's actually a really good service. I volunteered there for several years, and they do a lot of good work. Um, Most of the people that I would help out were um, just had basic W-2, one job, and they needed help filing their tax forms, and that was about it. Um, so yeah, that's about it. Hold on, wait a minute, what? Okay, that makes sense. Sorry. Um, so if you are a small taxpayer, um, 64,000, and also remember you also have the tax deduction. So if you take your income and you adjust it, you get your adjusted gross income. And if you're less than 64,000, which most, to be honest, most people in the United States are, you could just go here for free. Weekends are usually really busy because everybody takes their weekends and go and do their taxes as soon as possible. So I mean, that's kind of how it is. But if you're patient and you want to wait in line, I mean, or some places have appointments, which is really nice. You just sit and you talk, and you know, it's pretty easy. So, lastly, make your tax payments online. It's easy. You can make your tax payments online by phone or by a mobile device. Paying online is safe and secure. It puts you in the control of paying your tax bill and gives you the peace of mind. You determine the payment date and you will receive an immediate confirmation from the IRS. Go to irs.gov/payments to see your online payment options. Okay, I mean, the main takeaways from this page are pretty simple. Um, Here's how you file. Free file, so you can use a commercial software if you have a certain income level, which most people can do it for free. You can have free tax help. You go into a place and have volunteers help fill out your taxes for free, which I've done for several years. It's really easy, um, and you can make your payments online for free. So those are the main takeaways of this page. So let's move on to the next page. Okay, filing requirements. So now we're going to get into filing requirements, um, and most people, believe it or not, ask, do I have any filing requirements? Well, maybe. Maybe do, maybe don't. But we will see. Wait a minute. Oh, hold on. hold on, let me get that back up here. Sorry. Let's see. Where are you at? There you go, pop out. Perfect. Perfect. Okay, sorry about that. Um, oh, where'd it go? I'm still learning, but give me some areas to learn and grow and all that jazz. So, hmm, that's good coffee. Okay, so do you have to file? Um, use chart A, B, or C to see if you must file a return. U.S. citizens who lived in or had income from a U.S. territory should see publication 570. Residents of Puerto Rico can use tax topic 901 to see if they must file. Even if you do not otherwise have to file a return, you should file one to get a refund of any federal tax withheld. You should also file if you are eligible for any of the filing credits: earned income credit, additional child tax credit, American Opportunity Credit, credit for filed federal taxes on fuels, premium tax credit, credit for sick and family leave. Okay, so this was the other, I guess, big question people would always ask. Well, why do I have to file? Um, and some people say, well, do I have to file? Well, it depends. And even if you don't have to file, and I guess if I remember correctly, the instructions do actually go through and talk through who actually has to. Even if you're not required to file, you probably should file for these credits. I mean, the IRS is telling you, hey, you're eligible, you might be eligible for one of these credits, and if you want literally free money, you fill out the form and send it in. I mean, they're trying to help you out here. Um, and I remember, I believe if I want to say that the earned income credit is the one of the most underutilized credits for eligible persons out there. I mean, a lot of people are eligible, but they don't file because they're not required to file. So what that means is there's just money left on the table. What makes the earned income credit so unique is that its thresholds for eligibility is quite limited. So you have to have earned income, but you can't have too much earned income. So you got to be within a threshold, um, which most people who read the instructions are above the threshold, but a lot of people are eligible, but they just don't file for whatever reason. Okay, so see Publication 501 for details. Also see Publication 501 if you do not have to file, but received a Form 1099-B or a substitute statement. So 1099-B, so that's like investment type stuff. Okay, so if you buy stock, sell stock, things like that, those are usually 1099-B. Requirement to reconcile advance payments of the premium tax. If you, your spouse, or whom you are filing a joint return or dependent was enrolled in coverage through the marketplace for 2023 and advance payments of premium tax credits are made for this coverage, you must file a 2023 return and attach Form 8962. You or whoever enrolled you should have received Form 1095-A from the marketplace with information about your coverage with any advance payments. You should attach Form 8962 even if someone else enrolled you, your spouse or your dependent. If you are dependent on someone who's claimed on someone else's 2023 return, you do not have to attach a Form 8962 exception for certain. So if you also have the advanced payments of the premium tax credit, let me highlight that. Oh, look at that. You can actually, oh, well, you get the point. Exception for certain children under 19 or full-time students. Okay, so of course, kids under 19 or full-time students have special rules as well. If certain conditions apply, you can elect to include on your return the income of a child who is under the age of 19 at the end of 2023 or as a full-time student under the age 24 at the end of 2023. To do so, use Form 8814. If you make this election, your child doesn't have to file a return. So some parents just go ahead and elect to keep their children's income on their return because it's just easier to do. Um, I don't know, helps out. A child born on January 1st, 2000 is considered to be age 24 at the end of 2023. What? Oh my. Well, I mean, that makes you feel old. Has it really been 24 years? I guess it has. Okay. Hold on, I gotta just hold on a second. I'll be right back. For people that are listening in. Sorry about that. I thought I heard someone knocking on my door. Okay, so we're still in filing requirements. Just plowing away at this. Resident aliens. Okay. Just in case, I'm going to read through all of this, even if it doesn't apply. We're just going to plow through it here. Resident aliens. These rules also apply if you're a resident alien. Also, you may qualify for certain tax treaty benefits. Generally, you are a resident alien if you meet either the green card test or the substantial test for presence test for 2023. So with these tests, kind of they're very specific. So there's publication 519 for details. I mean, you can just look it up yourself. Um, Depending on how this goes, I may read through it. I mean, I'm just gonna plow through these instructions as I can. Let's see. Non-resident aliens and dual status aliens. Once again, just like resident aliens, these are very, very specific rules. These rules also apply if you're a non-resident or dual status alien, and both of the following apply. You're married to a U.S. citizen or resident alien at the end of 2023. You elected to be taxed as a resident alien. And once again, see Form 519 for details. Um, let's see. Specific rules apply if you're a resident alien, non-resident alien, or dual status. Most non-resident aliens and dual status have different filing requirements. May have to file the Form 1040NR or the non-resident. I believe not quite sure, but so I believe these instructions are only for the 1040 and the 1040 SR. So if you are non-resident, alien, dual status, aliens, you may have to file the 1040 NR, N as in Nancy, R as in Reagan, but you'll figure that out. I mean, so this may not pertain to you. So when and where should you file? Okay, well if you haven't figured that out, we'll go through there. So file Form 1040 or 1040 SR by April 15th, 2024. If you live in Maine or Massachusetts, you have until April 17th. Because of the Patriots' Day and the Emancipation Day holidays, if you file after the state, you may have to pay interest and penalties. See interest and penalties later. If you are serving in or support of the U.S. Armed Forces in a designated combat zone or contingency operation, you may be able to file later. See Publication 3 for details. If you e-file your return, so if you're serving or supporting, you may have to file later. See Publication 3 for details. If you e-file your return, there is no need to mail it in. However, if you choose to mail it in, as said, filing instructions and address are at the end of these instructions. So I've actually had that situation where I was helping somebody and they e-filed, and then they just went ahead and mailed in their return as well, which the IRS just returned their return to them. So because they already filed, I believe there was a letter saying this taxpayer has already filed. What do you want us to do with it? If this is identity theft, please, they had instructions and all that stuff. So in other words, the IRS just returned the tax return that they mailed in erroneously and just said, we don't know what to do with it. If this is an identity fraud, please, here's the information. So yeah, there's no need to mail in your return if you go ahead and e-file it. I mean, okay, there you go. What if you can't file on time? So this happens quite a bit in the business area. They have more precedent. What if you can't file on time? You can get an automatic 6-month extension if no later than the date your return is due, you file Form 4868. If you want to apply for an extension electronically, see Form 4868 for details. So mostly what I've seen this happen is that people that file extensions because they just don't have the details for some of their income. And what I mean by that, it's usually like business type people that do not have the information to file their personal return because their business return hasn't been completed yet. So you can just get an automatic 6-month extension, which is amazing. It's fantastic. But caution, an automatic 6-month extension to file doesn't extend the time to pay your tax. So that right there is pretty important. If you don't pay your tax by original due date of your return, you will still owe interest on the unpaid tax and may owe penalties. So when you file your extension, it'll say on the form 4868, and you can read through the instructions. It'll tell you exactly what to do, but they still want a payment made. Or else they'll assess interest and penalties on that unpaid. So you're probably asking, well, how do I know? Well, you have to estimate. I mean, most people overestimate, so they pay more and then they just get a refund back, but it's up to your own situation and whatever. If you are a U.S. citizen or resident alien, you may qualify for automatic extension of time to file without filing Form 4868, you may qualify if on the due date of your return you meet one of the following conditions. So the IRS will say, hey, you're a U.S. citizen or resident alien, we'll just give you an automatic 6-month extension. You live outside the United States and Puerto Rico, and your main place of business or posted duties outside the United States and Puerto Rico, or you are in the military and naval service on duty outside the United States and Puerto Rico. So if you're on military service or you live outside the United States, you get an automatic one. The extension gives you an extra 2 months, so an extra 2 months to file and pay tax, but interest will be charged from the original due date and return on any unpaid tax. You must include a statement showing that you meet the requirements. If you are still unable to file your return by the end of the 2-month period, you can get an additional 4 months. If no later than June 17, 2024, you file Form 4868. This 4-month extension doesn't extend the time to pay your tax. Okay? Right there, doesn't extend the time to pay your tax. See Form 4868. So, if you live outside the United States and or Puerto Rico, the IRS will give you an automatic 2 months, but you still have to pay. And then if you need more time, you get 4 months. So the point of this page, to summarize, is if it tells you if you have to file, it tells you, hey, you may need to still file. You may want to still file even if you don't have to file. And then it shows you for resident aliens, non-resident aliens, dual aliens, what to do for kids, when and where you should file, what you can't file, what if you can't file on time. So it kind of helps you with all of that. Okay, so going on the next page. Private delivery services. If you choose to mail your return, you can use certain private delivery services designated by the IRS to meet the timely mailing, timely filing rule for taxpayers. Okay, so the FedEx overnight. Okay, so here's FedEx, here's DHL, here's UPS. So if you choose to mail your return, you can use certain private delivery service to meet the timely mailing, treated as timely filing, paying rule for tax returns and payments. So if you want to send it by, instead of US, United States Postal Service, you just want to mail it in, FedEx, DHL, UPS, they have specific services that you have to meet. To check for an updated list of designated private delivery service, go to irs.gov/PDS. For the IRS mailing address to use, if you're using a private delivery service, go to irs.gov/PDS street address. The private can tell you how to get written proof of the mailing date. Okay, so previously we mentioned about filing requirements and go through the charts A, B, and C to see if you actually have to file, if you're required to file. So I'm going to read through this. If your filing status is single and you're under 65, then the return of your gross income was at least $13,850. If you're over 65, $15,700. Married filing jointly under 65, so you have 27,700. 65 or older, one spouse, 29,200. 65 or older, both spouses, 30,000. So here it is. If you're married filing jointly, married filing separately, any age, it's $5. So that's one of those weird IRS instruction fun facts, is that if you make more than $5 married filing separately, you're required to file. But if you filed jointly, it goes up to 27, 29, 30,000, something like that. So it's one of these weird, I don't know, tax instruction um, details. I don't know. I always say, you know, you got to pay attention to the details, and that's kind of like, I don't know, one of those little fun things. Head of household, under 65, 20,000, 65 or older, 22,650. Qualifying surviving spouse, um, under 65, 27, 7, 65 or older, 29, 2. So kind of like right above. Obviously you can't. Okay, so let's see. So if you're born 59, you're considered to be age 65. Gross income means all income you received in the form of money, goods, property, and services isn't exempt from tax, including any income from sources outside the United States or from the sale of your main home, even if you can exclude part or all of it. Don't include any Social Security benefits unless you are married filing separate and you lived with your spouse at any time in 2023, or one half your Social Security benefits plus your other gross income and any tax exempt interest is more than 25,000 or 32,000 if married filing joint. If A or B applies, then see the instructions for 6A or 6B and figure the taxable part of Social Security benefits, and you must include the gross income. Gross income includes gains but not losses. Reported on Form 8949 or Schedule D. Gross income from business means, for example, the amount on Schedule C, line 7, or Schedule F, um, line 9. But in figuring gross income, don't reduce your income by any loss, including any loss on Schedule C, line 7, or Schedule F, line 9. If you didn't live with your spouse at the end of 2023 or on the date of your spouse died, and your gross income was at least $5, you must file a return regardless of your age. So if you didn't live with your spouse at the end of 2023 or on the date of your spouse died, then your gross income was at least $5. So there we are with the $5 thing. So there we go. So I don't know why it's like this. Excuse me. I'm just I don't know why this is, but it's just one of these weird things. So yeah, there's for most people, they just go to chart A and it fills it out. So this page, private delivery service, and then the chart A for filing requirements. That's kind of what's out there. Chart B for children and other dependents. See who qualifies as your dependent later. Okay, so in my experience, most people just look at chart A, and chart A will tell them, oh yeah, I need to file because here's my filing status, and here's my age, and here's my gross income. That's the requirement, but like like the instructions said before, just because you're not required to file, you may still want to look into whether you should file so that you can get a credit, one of these credits up here to get your money back, or you had tax withheld. You just want to get that back. So that's chart A, my experience. Most people just look at that and say yes or no, and then move on with their life. Next page, chart B. This one gets into the more details. Usually only people that have kids or dependents, and they just walk through this. So if your parent can claim you as a dependent, use this chart if you must file. So this is specifically um, dependents for children and dependents. In this chart, unearned income includes taxable interest, ordinary dividends, capital gains distributions. It also includes unemployment compensation, taxable Social Security benefits, pensions, annuities, and distributions of unearned income from a trust. So trust fund kids right here. Earned income includes salary, wages, tips, professional fees, taxable scholarships, and fellowship grants. Gross income is the total of your unearned income. So here's one thing that my experience, at least what happened in my professional life, is kids that would have taxable scholarships. So if they had, like, I don't know, their cost of attending a school was X, but they received a scholarship, multiple scholarships that were above X, that may be considered a taxable scholarship because it's not actually paying for any qualified expenses. So that's kind of where I saw the most aggression from is kids that had taxable scholarships, or I've also seen unearned income where kids had interest, dividends, or capital gains distributions. In other words, their parents set up a fund, an investment account, and just put underneath the kids' names, thinking that, oh, well, the kids will have a lower rate. Well, that still is included here according to instructions. So here's how kids and other dependents walk through this. Single dependents, where you either age 65 or older or blind. No, you must file the return if any of the following apply. Your unearned income because over unearned income. So that would be taxable interest, ordinary dividends, gain distributions. Your earned income was over 13,850, and then your gross income was larger of 1250, or your earned income up to 1350 plus 400. So there we go, if that makes sense. So if you're under 65, not blind or not blind, um, file this. If yes, you must file a return if any of the following applies. Your unearned income was over 3,100 or 4950. If 65 or older or blind, your earned income was over. So once again, whoops, ah, oh biscuits. Well, that's not working now. And then your gross income is larger, was more than the larger of 3,100, or your earned income right here. And then married dependents. So this gets into those weird situations of married dependents. Usually, if you're married, you're not a dependent, but I mean, they write it in the instructions here because that's happens sometimes. Um, and here's where that $5 is coming into play. That, I mean, of all the cases, it's that $5 of gross income if you're filing separately from your spouse and you're a married dependent. So, like I said, Chart B is mostly for kids, um, and whether they need to file a return. So we'll get into. I believe the instructions are more specific. What happens if the kid doesn't want to file? Uh, then we can get into that. So that's page 10. Page 11 is getting into other situations. So chart A fits most people. Chart B fits a little more. And then chart C is, I don't think I've ever, I'm trying to remember. I don't think this, I've ever experienced somebody that didn't fit in chart A, didn't fit in chart B, but actually fit in chart C independently. I mean, they have instructions for a reason, but I personally have never seen that. Um, alternative minimum tax, tax on qualified plan, including an individual retirement arrangement or other tax favored account, household taxes, employment taxes. So that would be like having a nanny, something like that. Um, I suppose that might work. Social Security and Medicare tax on tips you didn't report to your employer or wages you received from an employer who didn't withhold these taxes. Uncollected. So maybe. Uh, so we're looking for any condition that may apply. You or your spouse finally jointly received health savings account, Archer MSA, or Medicare Advantage MSA distributions. You had net earnings from self-employment of at least $400. Oops. Actually, yeah. So maybe but that's net earnings. You had wages of $108. Well, that's oddly specific. And 28 cents or more from a church or qualified church-controlled organization that's exempt from employer, Social Security, and Medicare taxes. So one of those fun, like I mentioned before, the $5 limitation. Well, here's another one. It's $108.28 or more from a church. Like what is that? That kind of throws it up in the air. Advance payment of premium tax credit were made for you, your spouse, or a dependent enrolled in coverage to the marketplace. You or whoever enrolled you should have received. So if you had premium tax advance payments, you have to file a return. Or you're required to include amounts under Section 965, or if you have net tax liability under Section 965 that you are paying in installments under Section 965H or deferred, making an election under 965. So this right here is quite rare. I don't think I've ever seen it um, happen in the wild. But I mean, I guess it does happen. Uh, Oops, hold on, where are you going? Okay, so like I said, chart A for most people, I've ever seen most people, chart B for children or dependents, and then chart C really other situations that seem to follow. So line instructions. So now we're going to get into the absolute lines um, for the Form 1040. Also see the instructions for Schedule 1 through 3 that follow the Form 1040 and 1040 SR instructions. Free File makes available free brand name software and e-file. Visit irs.gov/freefile for details and see if you are eligible. Everyone can file Form 1040. 1040 SR is available if you were born before uh, January 2nd, 1959. Fiscal year filers. If you're a fiscal year filer using tax year other than January 1st or December 31st, enter the beginning, ending months of your fiscal year in the entry space provided by the top of the page 1 of Form 1040 1040 SR. Write in information if you need to write a word, code, or dollar amount on 1040 or 1040 SR to explain an item of income or deduction but don't have enough space to enter the word, code, or dollar amount. You can put an asterisk next to the applicable line and put a footnote at the bottom of page 2 of your tax return indicating the line number and the word, code, or dollar amount you need to enter. Section references are Internal Revenue Code. Well, just in case anyone didn't know that. So this tells you, oops, biscuits. This tells you what form to file, fiscal year file. Oops. I mean, if you're already here, you know what you need to fill in and then write in information. Name and address. Print or type the information in the spaces provided. If you are married, filing a separate return, enter the spouse's name in the entry space below filing status checkboxes instead of below your name. If you filed a joint return for 2022 and you're filing a joint return for 2023 with the same spouse, be sure to enter your name's Social Security number in the same order as your 2022 return. So I've seen this happen where people rotate back and forth between spouses, who's going to be listed first, who's going to be listed second. And what happens is the system, the record keeping system, they always go on the primary or the first Social Security number. And so if you switch back and forth, it's as if you're switching the record number, even though it's the same, Social Security numbers on the return. It's usually the first one that carries importance for the record keeping ability. Name change. If you changed your name because of marriage, divorce, etc., be sure to report the change to the Social Security Administration before filing your return. This prevents delays in processing a return and issuing refunds. It's also safeguards your future Social Security benefits. Okay, so I've seen that happen before where people, for whatever reason, change their name and they go to file the return and then it gets rejected because the name doesn't match the Social Security number. So just make sure that's up to go. Oh, who is that? Hold on. All right. Okay. Address change. If you plan to move after filing a return, use Form 8822 to notify the IRS of their new address. So if you're e-filing, um, or if you're mailing it in, make sure if you're going to change your address after you file, just go ahead and submit that form is all they're saying. P.O. Box. Enter the box number only if your post office doesn't deliver mail to your home. So if you have P.O. Box, just if you have a home address, use your home address, but that's preference. Foreign address. If you have a foreign address, enter the city name on the appropriate line. Don't enter any other information on that line, but also complete the spaces below that line. Don't abbreviate the country name. Follow the country's practice for entering the postal code and the name of the province, county, or state. So, I mean, if you have a foreign address, just follow the foreign address process, and get that settled away. What's going on here? Um, Death of a taxpayer. Um, so if you're dead, you're probably not filing a tax return, but other people might file for you. If a taxpayer died before filing a return for 2023, the taxpayer's spouse or personal representative may have to file and sign a return for that taxpayer. A personal representative can be an executor. administrator, or anyone who is in charge of the deceased taxpayer's property. If the deceased taxpayers didn't have to file a return but had tax withheld, a return must be filed to get a refund. The person who files the return must enter deceased. So you must enter deceased on the return, the deceased taxpayer's name, the date of death across the top of the return. If this information isn't provided, it may delay in the processing of the return. Well, there's my cat in the background again. There he is. He helps me through streaming and getting things done. Oh, now he's just staring. He's curious what we're doing. If your spouse died in 2023 and you didn't remarry in 2023, or if your spouse died in 2024 before filing a return for 2023, you can still file a joint return. A joint return should show your spouse's 2023 income before death. I mean, if they're still earning an income after death, that's, that's pretty amazing. But enter filing as surviving spouse in the area where you sign the return. If someone else is the personal representative, they must also sign. All taxpayers of income, including financial institutions, should promptly be notified of the taxpayer's death. So if you're gonna, after you die, you have to notify everyone. Just remember that. This will ensure the proper reporting of income earned by a taxpayer's estate or heirs. A deceased taxpayer Social Security number shouldn't be used for tax years after the year of death, except for estate return purposes. So after you die, stop using your Social Security number for tax years after your death. Try to remember that. This is helpful information. Probably for people that you leave behind. So, Social Security number. An incorrect or missing Social Security number can increase your tax, reduce your refund, or delay your refund. To apply for, so right here, that for some reason, I've had this happen several times when I'm helping individuals, is for whatever reason, they don't provide a Social Security number, or they provide an incorrect one, thinking that it's going to go through. Like, for example, they just give me 999, all nines. And it's like, what are you supposed to do with that? Obviously it's going to get rejected, but if the person that you're helping is saying, hey, that's really my Social Security number, which it doesn't, and you file it, it'll just get refunded. It'll just get rejected. So there's a bit of information for my personal or professional life here. To apply for a Social Security number, fill in Form SS5 and return it along with the appropriate evidence documents to the Social Security Administration, SSA. You get Form SS5 online at ssa.gov/forms/ss5.pdf from your local SSA office, or by calling the SSA at 800-777-1213. It usually takes about 2 weeks to get an SSN number once the SSA has all the evidence and information it needs. So my experience is that they're pretty helpful. I mean, if you're patient and you like to sit in line, I mean, it's pretty easy just to sit there, and they're usually pretty helpful. Check that both the name and the Social Security number on your forms 1040 or 1040SR, W-2, and 1099 agree with Social Security card. If they don't, certain deductions and credits on Form 1040 or 1040S may be reduced or disallowed, and you may not receive credit for Social Security earnings. So, I mean, I've seen that happen before, where people give their employer the wrong Social Security number. I don't know why. Maybe they have some personal issues or whatever. But when they go to file, they're going to have a problem because their Social Security numbers don't match with the SSA, or so then that just causes a whole bunch of issues, because then they have to go back to their employer or whoever gave them a tax form and try to reconcile the difference. It's just, don't do that. If they don't, if your form W-2 shows an incorrect Social Security number, notify your employer or form issuing agent as soon as possible. Make sure your earnings are credited to your Social Security record. If the name or Social Security number on your Social Security card is incorrect, call the SSA. So like I said, that's just a headache. Don't do that. So here's how to enter in your name. What happens if you have a foreign address, PO box, if you're dead, or Social Security number. So moving on. So once you are issued one, um, use it to file your tax return, your Social Security number to file your return, even if your Social Security does not authorize employment or if you haven't been issued a Social Security number that authorizes employment and you lose your employment authorization. I-10 will not be issued once you have been issued a Social Security number. So I've seen this before. So somebody has an I-10 and then they get a Social Security number and then they try to go back and get an I-10 because for whatever reason they lost their Social Security number. Well, no, you can't go back to your I-10. You have to use your Social Security number. You can't switch back and forth. That's just not how it works. I mean, I think it's self-evident, but whatever. IRS individual tax identification numbers, I-10s for aliens. If you're a non-resident or resident alien and you don't have and aren't eligible to get a Social Security number, you must apply for an I-10. It takes about 7 weeks to get an I-10, so this is what they're talking about before. It's just the individual taxpayer identification number. If you already have an I-10, enter it where you see your Social Security number requested on your tax form. So it's kind of like a Social Security number, but for people that can't have Social Security numbers. Um, Some I-10s must be renewed. If you haven't used your I-10 on federal tax return at least once for tax years 2020, 2022, or 2023, it has expired and must be renewed if you need to file a federal tax return. If you don't need to renew your I-10, and if you don't need to file a tax return. So, I mean, there you go. If you don't use it, you lose it. So, I-10s assigned before 2020, 2013 have expired and must be renewed if you need to file a tax return. If you previously submitted a renewal application as approved, you do not need to renew again unless you haven't used your tax I-10 on a federal tax return for at least one tax year, for at least once for tax years 2020, 2021, or 2022. So use it or lose it. An I-10 is for tax use only, so I mean, they are cool, but I mean, you could put it on the side of your car or side of your house or whatever, but really you should only use it for tax uses only. For tax use only. It doesn't entitle you to Social Security benefits or change your employment or immigration status under U.S. law. So, for more information on I-10s, including application, expiration, and renewal, see Form W7 and its instructions. If you receive a Social Security number after previously using an I-10, stop using your I-10. So, once again, stop using your I-10 once you get a Social Security number. Use your Social Security number instead. So, I mean, it says right here, they repeat over and over. Um, like, I mean, filling out your taxes is just basic math and reading instructions. If you, it's really easy to do. Um, so visit a local IRS office or write a letter to the IRS explaining that you now have a Social Security number and want all your tax records combined under your Social Security number. Details about what to include with the letter and where to mail it are at irs.gov/I-10. So they actually tell you this is what we want, this is how we want it, this is what format we need. So that's kind of, it's really, really easy to do. Non-resident alien spouse. So I've helped quite a few people in this exact situation. So someone from outside the United States comes to the United States and their spouse is a non-resident alien. So they come outside the United States to inside the United States for like jobs, most likely it's for like a job, and then their spouse comes along with them. And what happens is that their spouse becomes a non-resident alien, but then if your spouse is a non-resident alien, your spouse must have either a social security number or an I-10 if you file a joint return, or if your spouse is filing separate returns. So it's one of these weird. I've seen this more times than what I wanna say. But people come to the United States um, with their spouse for a job, but their spouse doesn't work, and so they always ask, well, can I include my spouse on my return? Well, I mean, they must have a social security number or an I-10. Well, if they don't, then you generally there's instructions. We'll get to it. We'll get to it. Presidential election campaign. So the fund helps pay for presidential election campaigns. This fund reduces candidates' dependency on large contributions from individuals and groups and places candidates on equal financial footing in the general election. The fund also helps pay for pediatric medical research. Well, that's new. I didn't know that the election fund, pediatric medical research. If you want $3 to go to this fund, check the box. If you're filing a joint return, your spouse can also have $3 go to the fund. If you check a box, your tax or refund won't change. So this has been $3 for as long as I can remember. And with inflation and everything going up in costs, I honestly don't know how far $3 is going to go. Um, in the past, the pediatric medical research was not part of the presidential election fund, but I guess it is now. So that's that's kind of interesting. I mean, it's I mean, when I think of presidential election fund, campaign fund, I don't think of uh, medical research for kids. I don't know, maybe it's just me. Filing status. Let's move on. Filing status. Check only the filing status that applies to you. Well, that's pretty obvious. You tend not to check filing status for things that don't apply to you. Um, the ones that usually give you the lowest tax are listed last. Married filing separately, single, head of household, married filing joint, qualifying surviving spouse. So the IRS here is saying, okay, well, here's the options that you can choose. This one usually has the most tax. This one has the least amount of tax, lowest tax, usually. So you gotta read through the instructions. The IRS isn't gonna tell you, oh, hey, this is what's going on. But they're saying, hey, pay attention. Like I said before, um, it's if you can read instructions and do basic math, you can file your own return. I mean, it's pretty easy. But if you want more information about marital status, go to publication 501. More than one filing status. More than one filing status can apply to you. You can choose the one for which you qualify that will give you the lowest tax. So the IRS here is saying, hey, you may file for more than one. You may be eligible for more than one status, but you probably just want to go with the one with the lowest tax. So for example, this is probably the most common that I've seen if you're married filing separately or you're married filing jointly. So what it means there is clearly you're still married. You know, I don't know your personal situation, nor does the IRS. Um, and they're saying right here you can file for either married filing separately or you can do married filing jointly. But they're saying usually if you file jointly, you'll get a lower tax. I've seen where married filing separately actually has lower tax than filing jointly, but usually usually it's the married filing jointly as a lower tax in my experience. Everyone's situation is different, and all this other stuff. Okay, so single. So here you can choose. The IRS here saying, hey, you can qualify for more than one status, but just go with the lowest one. Give you the lowest tax. So I don't know. They're just trying to help out. Single. You can check the single box at the top of the 1040 or 1040 SR if any of the following was true on December 31st, 2023. You were never married. You are legally separated according to your state law. So any of these are true. You're never married. You're legally separated according to your state law under a decree of divorce or separate maintenance, but at the end of 2023, your divorce was final. You are considered married and can't check the box. So if you're legally separated, but you're not officially married or divorced yet, then you go single. Or you're widowed before January 1st, 2023 and didn't remarry before the end of 2023. But if you have a child, you may be able to use qualifying surviving spouse. Filing status. See the instructions for qualifying filing spouse. So if so, there's another one. So single, they really give you three options. Either you're never married, you still are married, but it's not officially divorced yet, or you're widowed and you didn't remarry. That's usually single. Married filing jointly. You can check the box married filing jointly box at the top of the 1040 or 1040 SR if any of the following apply. You're married at the end of 2023, even if you didn't live with your spouse at the end of 2023, and you didn't remarry in 2023. You're married at the end of 2023 and your spouse died in 2024 before filing a 2023 return. So married filing jointly, they're giving you these. Okay, so now it gets into all these different specific case issues. Hmm. Married couple filing joint return, filing jointly, report their combined income and deductions, combined allowances on one return. They can file a joint return even if only one had income or even if they didn't live together all year. So on paper, it's saying right here, you can file a joint return even if one had income or even if they didn't live together all year. So, however, both persons must sign the return. Once you file a joint return, you can't choose to file separate returns for that year after the due date of the return. So, kind of stuck there. Uh, wait, what is this? Do. Okay, what's going on here? Okay, joint and several tax liability. If you file a joint return, both you and your spouse are generally responsible for the tax and interest penalties on the return. This means that if one spouse doesn't pay the tax due, the other may have to, or if one spouse doesn't report the correct tax, both spouses may be responsible for additional taxes assessed by the IRS. You may want to file separately if, right here, if you believe your spouse isn't reporting all their income, or you don't want to be responsible for any tax due, a spouse doesn't have enough tax to tell or doesn't pay enough estimated tax. So what this means, in my experience, I've seen people that are going through a divorce and they don't want to be liable for their soon-to-be ex-spouse's income and tax if they have other income. It makes sense to file jointly, but for whatever reason, people don't do that, and that's okay. Everyone has their own situation. Uh, Non-resident aliens and dual status aliens, generally a married couple, can't file a joint return if either spouse is a non-resident alien at any time during the year. So, like I was saying before, with the resident alien, non-resident alien spouse, so you can't file a joint return if either spouse is a non-resident alien during the year. However, if you're a non-resident alien or a dual status alien and were married to a U.S. citizen or a resident alien at the end of 2023, you can elect to be treated as a resident alien and file a joint return. So there is that information right there. So generally, you can't file a return, but you can elect to be a resident alien and file a joint return. So see publication 519 for details, and it'll walk you through it. And that's, in my experience, what people generally do when they're in that situation, but every situation is different, so I'll read the instructions and walk through it. So this page here talks about ITINs, Social Security numbers, non-resident alien spouse, presidential election campaign. Remember, those $3 go to the pediatric research, apparently. And then the filing status of single, married, filing jointly. And then we're going to move on to married, filing separately, and head of household. Okay, check the married filing separately box at the top of the Form 1040 or 1040 SR if you're married at the end of 2023 and file a separate return. So this filing status is pretty straightforward. Are you married? Yes, no. Is your spouse filing their separate return? Yes, no. And then you figure it out. You go from there. I mean, it's pretty easy to figure out. Enter your spouse's name in the entry below, and below the filing status checkbox. Be sure to enter your spouse's social security number, individual tax identification number, in the space for the spouse's social security number on Form 1040 1040 SR. If your spouse doesn't have and isn't required to have a social security number, I-10 enter NRA in the entry space below the filing status. So NRA, I'm guessing, may represent non-resident alien, and then goes to those rules that I just said above. Okay. If you're married and filing a separate return, you generally report only your own income, deductions, and credits. Again, the IRS here is saying only report for yourself. Don't report for your neighbor, whatever. Um, just your own stuff. I mean, I thought that was evident, but we've got to spell it out here. Generally, you're responsible only for the tax on your own income. So you're responsible for your income, the tax on your own income. Different rules apply to people in community property states. See publication 555. So if you live in a state that has community property rules, that's where you get into these weird situations, and there's a lot of rules. So try to go through and read that if you're in a community property state. My best professional situation is just Google it. I mean, go on the internet and search, am I in a community property state? Then it'll look at publication 555 and read through it. However, you usually pay more at the tax than if you use another filing status for which you qualify. Once again, married filing separately is usually the highest tax for any of the statuses that you usually qualify. Also, if you file a separate return, you can't make the student loan interest deduction or the education credits, and you'll only be able to take the earned income credit and child and dependent care in very limited circumstances. So if you go with married filing separately, it's going to limit both on your credits and what you can deduct. You also can't take the standard deduction if your spouse itemizes. For situations where you might file separately, see joint and several tax liabilities. You may be able to file as head of household if your child living with you and you're lived apart from your spouse during the last 6 months. Child living with you and you lived apart from your spouse in the last 6 months of 2023. So you'd marry persons who live apart later. So I've seen this happen in my professional situations. Usually it happens with people that are divorcing or planning to divorce. And what they do is they go ahead and they itemize and they file their return first as soon as they can. And then their spouse um, doesn't know or isn't informed whether or not their spouse itemizes. So if spouse one files first, itemizes, and then doesn't tell spouse two will go for standard deduction because that's usually what people get the lowest tax from. And then what happens is that spouse two's tax return will get rejected because they'll say, hey, you're already listed as a spouse for spouse number one, and they itemized. You have to itemize too as well. And so spouse number two will try and itemize, but it usually doesn't benefit them. So there's all these little rules and procedures and all these other things that people do when they are filing separately. Just try to work together, and um, I mean that's what the IRS is telling you right here. Um, and if you had a child, you can do head of household. So there you go. Head of household. You can check the head of household box at the top of 1040 or 1040 SR if you're unmarried and provide a home for certain other persons. You are considered unmarried for this purpose if any of the following applies. You're legally separated according to your state law under decree or separate maintenance at the end of 2023. But if at the end of 2023 your divorce is final, you're considered married. You're married but lived apart from your spouse for the last 6 months of 2023, and you meet the other rules under married persons who live apart later. So they're going to go through those rules. If you're married and your spouse was a non-resident alien at any time during the year, and the election to treat the alien spouse as a resident alien is not made. Okay, so like I said here, you can be if you're married to a non-resident, you can elect to be treated as a resident alien, file a joint return, or if you're married and your spouse is a non-resident alien anytime during the year, you may and the election to treat the non-alien spouse as a resident was not made. You can do head of household. It says right here. Check the head of household on box only if you're unmarried or considered unmarried. Either test number one or test number two applies. Okay, so of course they have tests that they have to go through. Um, you paid over half the cost of keeping up a home that was the main home for all of 2023 of your parent whom you can claim as a dependent except under multiple support agreement who qualifies as a dependent later. Your parent didn't have to live with you. Okay? So you can check head of household if you pay over half the cost keeping up home that was the main home for your parent that you claim as a dependent, but you don't actually have to live with you. So there's one of those interesting rules. So you can have a dependent who doesn't live with you, but you support more than half of them, and you can be head of household. Test number two, you paid over the half cost keeping up home in which you lived, in which one of the following also lived with more than half the year. Any person whom you can claim as dependent. So this is now they have to live with you, to which you lived, keeping up home in which you lived. Any person you claim as dependent, but don't include your child whom you can claim as dependent because of the rules. Separated children are separated or divorced or separated parents under who qualifies as your dependent later. Any person who is your dependent only because they live with you for all of 2023 or any person who claimed as a dependent under multiple support agreements who qualifies as your dependent later. So one of these have to apply. So this is test number 2. Your unmarried qualifying child isn't your dependent. They are your dependent. Or your married qualified child who isn't your dependent only because you can be claimed as a dependent on someone else's 2023 tax returns, or your qualifying child who isn't, even though you're the custodial parent, isn't your child because the rules isn't your child. So there's another situation. So you can be head of household for test number 1, test number 2. Test number 1 is about your parent. Test number 2 is about a dependent and paying for your more than half your own home, even though your child. So if your child doesn't claim as your dependent, either enter the if the child doesn't claim as your dependent, enter the child's name in the entry space below the filing status checkbox. If you don't enter the name, it will take us longer to process your return. So it's one of those situations where you can have a child that qualifies as um, your child underneath head of household, but they're not your dependent, but you still have to list them, or else it'll just take longer to process your return. Is what right there. That's what I'm saying. Qualifying child. To find out if someone is qualifying, you're qualifying. See step 1 under who qualifies as your dependent later. Dependent. So there's a difference here between qualifying child and a dependent for this status. Dependent. To find out if someone is your dependent, see who qualifies as your dependent later. Tip right here. The dependents you claim are those you list by name and social security number in the dependent section on Form 1040 SR. Exception to time lived with you. Temporary absence by you or the other person for special circumstances such as school, vacation, business, medical care, military service, or detention in juvenile facility count as time lived with in the home. See also kidnapped child. So that gets into another situation here. If the person for whom you kept up at home was born or died in 2023, excuse me, you still may be able to file as head of a household. If the person is your qualifying child, the child must have lived with you for more than half the part of the year the child is alive. If the person is anyone else, see publication 501. Similarly, if you adopted the person from whom you kept up a home in 2023, the person was lawfully placed with you for legal adoption by in 2023, or the person was eligible for foster care placement during 2023, the person is considered to have lived with you for more than half of 2023. If your home was this person's main home for more than half the time since the person was adopted or kept with you in 2023. Keeping up a home. To find out what is included in the cost keeping up a home, see publication 501. So this page talks about married filing separately and head of household. So, okay. So now we're going to get into qualifying spouses, married persons who live apart, digital assets. So that might be helpful. Hold on, what someone's. I'll be right back. Okay, so now we're gonna get into married persons who live apart. We're on page, let's see, page 15 of the 2023 Form 1040 instructions. So here we go. Married persons lived apart, even if you weren't divorced or legally separated in 2023, you're considered unmarried if all of the following apply. You lived apart from your spouse for the last 6 months. You file a separate return. So you live apart. You file a separate return. You paid over half the cost of keeping up your home in 2023, and then your home was the main home of your child, stepchild, or foster child for more than half the year. And then if you can claim this child as your dependent or count the child, except that the child's other parents can claim the child under the rules for children of divorced or separated parents who qualify as your dependent. So, married persons who live apart, you're considered unmarried. You are considered unmarried if all of the following apply. Okay, so reading what this says here is that if you live apart for the last 6 months of the year, you file a separate return, you paid over half of your cost of your own home, and then your home is the main home of your child, but you're not going to claim him. You could, but you're not. Then you're considered unmarried. So, reading the instructions here. Adopted child. An adopted child is always treated as your own child. An adopted child includes the child lawfully placed with you for legal adoption. Foster child. A foster child is any child placed with you for an authorized placement agency by judgment, decree, or other order of any court competent jurisdiction. Okay. Qualifying surviving spouse. You can check the qualifying surviving spouse box Form 1040 or 1040 SR and use the joint tax rates for 2023 if all of the following apply. So all of the following have to apply for the next section to be a qualifying surviving spouse. Okay, so your spouse had to die in 2021 or 2022 and you didn't remarry before the end of 2023. Okay, they give you a little bit of window there. Your child or stepchild, not a foster child, distinction here, whom you can claim as a dependent could claim as a dependent except that for 2023, so you have a child or stepchild, the child had a gross income of 4,700 or more, the child filed a joint return, or you could be claimed as a dependent on someone else's return. Okay? If the child isn't claimed as your dependent, enter the child's name in the entry space below the filing status checkbox. If you didn't enter your name, it'll take us longer to process your return. So once again, the IRS can't guess what the child's information is. You gotta enter it in. Number 3. So we're looking for all of the following have to apply. Spouse is dead. You have a child. Number 3. This child lived with you in your home for all of 2023. If the child didn't live with you for the required time, see exception to time lived with you later. Okay, number 4, you paid over half the cost of keeping up your home. Number 5, you could have filed a joint return with your spouse the year your spouse died, even if you didn't actually do so. Okay, so they have 5 qualifying rules for qualifying surviving spouse. 1, you have to have a dead spouse. 2, you have to have a child or stepchild. 3, the child had a gross in, or 3 is the child lived with you in your home for all of 2023. Number 4, you paid over half the cost of keeping up your home. And number 5, you could have filed a joint return. You didn't have to, but you could have. And those are the qualifications for qualifying surviving spouse. If your spouse died in 2023, you can't file as qualifying surviving spouse. Instead, see instructions earlier for the married filing jointly. Okay, so we already went over that. So, adopt a child is always your child. Just like you said before, dependent, define if somebody is your dependency who qualifies as your dependent later. Tip, the dependents you claim are those you list by name and social security number in the dependent section on the form 1040, 1040S, or 1040SR. So this actually, you can read about this. Lots of reports have been, papers have been written about this, about the great disappearance of dependents in the 80s when they started requiring to list both the name and the social security number on tax returns of dependents. There was a whole bunch of dependents that just disappeared. You can do a little bit of research and figure that out. It's kind of like an interesting case of where did all these dependents go? I don't know, interesting case. I think that happened in like the 1980s. Okay, exception to time lived with you. Temporary absences for you, by you or the child for special circumstances such as school, vacation, business, medical care, military. So school is probably the biggest one that people fall into. Um, Also see kidnapped child later who qualifies as your dependent as applicable. A child is considered to have lived with you for all of 2023 if the child was born or died in 2023 and your home was the child's home for the entire time the child was alive. Similarly, if the adopted child in 2023 or the child was lawfully placed with you for legal adoption by you in 2023, the child is considered to have lived with you for all of 2023 if your main home was the child's main home for the entire time since the child was adopted or placed with you in 2023. Keeping up a home. To find out what is included in the cost of keeping up a home, see publication 501. Digital assets. So this is what people were, I guess, asking about for the time being, is digital assets. I'm just going to read. This is pretty new stuff. Digital assets. Digital assets are any digital representation of value that are recorded on a cryptographically secure distribution ledger or any similar technology. For example, digital assets include non-fungible tokens, NFTs, and virtual currencies such as cryptocurrencies and stablecoins. If so, cryptocurrencies, stablecoins, NFTs, if these are something that you're familiar with, this is what they're talking about, digital assets. If a particular asset has the characteristics of a digital asset, it'll be treated as a digital asset for federal income tax purposes. Check yes. Check the yes box next to the question on the digital assets, page 1 of Form 1040 or 1040 SR, or any time during 2020 you received as reward, award, or payment for property, service, or sold, exchange, or otherwise disposed of a digital assets or any financial interest in any digital asset. So check the box if you held it or received or sold any digital asset. For example, check yes if any time during 2023 you received digital assets as payment for property or services rendered, received digital assets as a result of a reward or award, received new digital assets as a result of mining, staking, or similar activities, received digital assets as a result of a hard fork, disposed of a digital asset in exchange for property service, disposed of a digital assets in exchange for trade or another digital asset, sold a digital asset, otherwise dispose of any financial interest in a digital asset. So essentially, if you did anything with any NFT, cryptocurrency, or stablecoin, check yes on page 1, 1040, Form 1040 or 1040 SR, if you did any of these during 2023. So this is kind of something new, I believe, if I remember correctly. The IRS just put it on Form 1040 last year, the year before, but that's something new. You have a financial interest in a digital asset if you're owner of record of a digital asset or have ownership in a stake in an account that holds one or more digital assets, including the rights and obligations to acquire a financial interest, or you own a wallet that holds digital assets. The following actions or transactions in 2023 alone generally don't require you to check yes. So here are essentially the exceptions that they're going to go through. Exceptions to the rules. Holding a digital asset in a wallet or an account. Oops, go back. In a wallet or account, transferring a digital asset from one wallet or account that you own to or control to another wallet or account that you own or control, or purchasing digital assets including US or other real currency, including through the use of electronic platforms such as PayPal and Venmo. Okay, so let's get through that right here. So if you did anything with NFTs, cryptocurrency, stable, you click yes. But if you just held it in a digital asset in a wallet or account, you don't do anything. So it's kind of, or if you transfer it to yourself from one wallet to another, or you purchase digital assets using US or other real currency through use of electronic platforms. But it says do not leave the question unanswered. You must answer yes or no by checking the appropriate box. So they want an answer. They want an answer. You just say yes or no, and that's kind of all it is. How to report digital asset transactions. If in 2023 you disposed of a digital asset which you held as a capital asset through a sale, trade, exchange, payment, or other transfer, check yes and use Form 8949 to calculate capital gain or loss and report that gain or loss on Schedule D. So, right here, it's saying if you disposed of any digital asset, here's what you do. Okay, if you received any digital asset as compensation for services or disposed of any digital asset that you held for sale to consumers in a trade or business, you must report the income as you would report other income of the same type. For example, W-2 wages on Form 1040 or 1040 SR, line 1A, or inventory services on Schedule C. So if you dispose of any digital assets by gift, you may be required to file Form 709. See who must file and transfer subject to the gift tax in the instructions for Form 709. Okay. Okay, so digital assets, if you just held them, you don't do anything. But if you sold them, moved them, bought them, received them, then you say yes and report them. And if you sold them, you use the Form 8949 to calculate your capital gain or loss and report gain or loss on Schedule D. So it's pretty simple. I mean, like I said before, it's just math. You're just doing math and following instructions. So standard deduction. If you are, so now we're going to get into standard deduction. If you're filing Form 1040 SR, you can find the standard deduction chart on the last page of that form and can calculate the amount of standard deduction in most situations. Okay, standard deduction. Don't file the standard deduction chart with your return. So you want to make this easy for the people reviewing your return. So don't add things that they tell you not to add. Just give me exactly what they want. Follow the instructions and do basic math. I mean, it's pretty easy peasy. Hold on, let me check that out. Let's see, right here. So Okay. Single and married filing joint. If you or your spouse, if you're married and filing joint return can be claimed on as dependent on someone else's return, check the appropriate box in standard deductions section. If you're married and filing joint return, you can be claimed as dependent on someone else's return. If you file the joint return only to claim a refund of withheld income tax or estimated tax paid. Okay. If you're a dual status alien, check the spouse itemized on the separate return, or if you are a dual status alien box. So they have a box for that specific situation. I have not personally ever seen that, but I mean it does happen from time to time. Age blindness. So they do give if you're your spouse, if you're married and filing joint return, were born before January 2nd, 1959, or were blind at the end of 2023, check the appropriate boxes on the line labeled age blindness. Don't check any boxes for your spouse if your filing status is head of household. So this is one of those very specific situations. So death of a spouse in 2023. If your spouse were born before January 20th, but died before reaching age 65, don't check the boxes as spouse was born before 1959. A person is considered to reach age 65 on the day before the person's 65th birthday. So here's a fun birthday question that always happens. So you're considered to reach age the day before your birthday. So everyone always celebrates their birthday on their birthday. However, the IRS is saying right here, a person is considered to reach the age 65 on the day before the person's 65th birthday. So you're actually reaching that age before the day before your actual birthday. So I've I've had lots of uh, conversations about this, but you should actually celebrate your birthday the day before your birthday, not on your birthday. Because right here it's saying you reached age 65 the day before your 65th birthday. So I don't know, one of those fun facts that if you read the instructions, people pick up on. So for example, your spouse was born on February 14th, 1958 and died on February 13th, 2023. Ooh, that's unlucky. Your spouse is considered age 65 at the time of death. Check the appropriate box for your spouse. However, if your spouse died on February 12th, 2023, your spouse isn't considered age 65. Don't check the box. So that's one of those weird rules that people go through. Try to I guess people want to keep their spouses alive as long as possible, but try extra hard if it's only one day. Um, okay, so I'm going to let's see. Let me just take a okay. Death of taxpayer in 2023. Um, if you're preparing a return for someone who died in 2023, see publication 501. Okay, so let me just look at that on another screen here. Okay, blindness. Hold on, what is this?
Okay. So I'm actually just reading on another screen about
The birthday question that I just came up with. I was reading through.
let's see. Hold on. Let's see that. So,
Okay.
let's see.
Do 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 do. Do do do.
Do.
I'm currently taking a break. I'm taking a break and
Taking a break.
do 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 do. It's unusual. Do 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 do. Do 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 do. Do 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 do. Okay, so where was I at? Okay, yeah, so birthday stuff. Okay, blindness. Everyone knows it's blind. Okay, going on to married filing separately. The next, if married filing status is married filing separately, and your spouse itemized deductions on their returns, check spouse itemizes on a separate return, or you were a dual status alien. Nice. Okay. Married filing separately, but spouse had no income, isn't a filing return, and can't be claimed as another. Okay. You can check appropriate boxes on the label. So if you're filing married filing separately, okay, so you can still check for your spouse even though you're filing separately, which is kind of weird, but whatever. Who qualifies as your dependent? So here's where, before I get in this page, let me go see who's at the door again. Okay. Okay, so I turned up the heat. It's kind of cold in here. It's always good to turn up the heat and um, so yeah, awesome. Okay, so got two people watching me, which is great. Um, okay, dependents, qualifying child for child tax credit and the credit for other dependents. Follow the following steps to find out if the person qualifies as your dependent and to find out if your dependent qualifies to you to take child tax credit or the credit for the other dependents. If you have more than 4 dependents, check the box under dependents on page 1 of Form 1040-1040S and include a statement showing the information required in columns 1 through 4. The dependents tip the dependents you claim are those you list by name and social security number in the dependents section on the Form 1040 and 1040S. So, um, like I said before, there was a situation back in the 80s where they didn't require you to list the social security number, and then they started requiring the social security number. So there's a lot of returns that just magically no longer had dependents, and yeah, that's kind of an interesting case to read through to see what has happened in the past. Um, I mean, it's kind of an interesting case. So, do you have a qualifying child? A qualifying child is a child who is your son, daughter, foster child. So, here, let's go through the steps of do you have a qualifying child? Um, son, daughter, child, foster, have, for example, a grandchild, niece, nephew, and under age of 19 at the end of 2023, or under the age of 24 at the end of 2023, student and younger than your spouse filing jointly, or any age, permanently and totally disabled, defined later, and who didn't provide over half their own support for 2023, see publication 501 for what that involves, who isn't filing a return for 2023, or filing a joint return for 2023 to only claim refund of withheld income tax or estimated tax paid, see publication 501. So if you go and you read publication 501, it's very informative. I mean, it will tell you more information about income. Um, who lived with you? What? Who keeps pounding on my door? Someone's outside. Let me go see who it is. Do 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 do. It's unusual. I don't know who that is. Okay, let's keep marching along. Um, so if it meets all these, okay. So then you got special rules for any other person. Okay. Do you have a child who meets the conditions to be a qualifying child? Yes, go to step 2. No, go to step 4. So here's where a lot of people get lost in kind of like the steps of, I don't know what to say. Is your qualifying child your dependent? So even if you have a qualifying child, you have to go through all these steps. And yeah, so was the child a U.S. citizen, U.S. national, U.S. resident alien, or a resident of Canada or Mexico? Yes, continued. No, you can't claim. Was the child married? Yes. See married later. No, continue. Are you filing a joint return? Yes, you can claim the child as dependent. No, continue. Could you be claimed as a dependent on someone else's tax return? Yes, stop, you can't claim a dependent. So dependents can't claim dependents. No, you can't. You can claim this child as dependent. Complete columns 1 through 3 of the dependents section of page 1 of Form 1040 or 1040 SR for this child. Then go to step 3. Does your child qualify you for the child tax credit or credit for other dependents? Do you have a Social Security number, ITIN, or adoption taxpayer identification number? ATIN? It's like the A team, but for tax identification numbers. Um, so then you got these other questions here. Is your qualifying relative? So, I mean, this is the way it is. Um, Step 3, does a qualifying child qualify you for the child tax credit? It's kind of the same types of questions, um, same type of stuff. Is your qualifying relative your dependent? So, in my personal professional life, um, I get a lot of questions. I used to get a lot of questions about this. Um, so people would try to claim everybody they knew, um, lost cousins, um, lost uncle, aunts, neighbors, babysitters, whatever. People would try to claim all that stuff. But the IRS has the instructions, and I'll just read through here what they mean by a qualifying relative. A qualifying relative is a person who is your son, daughter, stepchild, foster child, or descendant of any of them, for example, your grandchild, or brother, sister, half brothers, half sister, or son or daughter of any of them, or father, mother, ancestor, or sibling of either of them, for example, your grandmother, or your step family, or any other person other than your spouse who lived with you all year as a member of your household if your relationship didn't violate local law. The person didn't live with you for the required time, see time with you lived with you later. And who is an unqualifying child of any taxpayer, not that they're being claimed, but any taxpayer, and who had gross income of less than 4,700, and for whom you provide over half the person's support in 2023. But see children of divorce or separated parents, multiple support agreements, and kidnapped child later. So this is what I was talking about before. This is where you get a lot of questions of, um, is your qualifying relative your dependent? So you may also have to file Form 3520. Well, that's a fun one. Yeah. So if you have a foreign account or receive distributions from a foreign grantor, truster, or foreign trust, then you have to file Form 3520. Foreign financial assets. Okay, so let me just sit back here for a minute. There we go. Okay, can you still see me? Let me just see. Well, that's just my legs. Let me see if I can scoot ahead a little bit. Okay. Chapter 11 bankruptcy cases. So you probably will have a professional that you work with for Chapter 11 bankruptcy. Um, but if you, oh gosh, oh my. But if you don't, here are the instructions. Um, let's see. If you're a debtor in a Chapter 11 bankruptcy case, is income tax payable to the bankruptcy estate and reported on the state's income tax returns includes earnings from services you performed after the beginning of the case, both wages and self-employment income, and income from property described in Section 54(1) of Title 11 of the U.S. Code that you either owned, or when the case began that you acquired after the case began, or before the case was closed. So, I guess be honest with your filings here. Because this income is taxable to the state, but don't include this income on your own individual tax returns. So they're dividing up the estate versus uh, your individual income tax. For that purpose, you must take into account all of your self-employment income for the year from services performed before and after the beginning of the case. Also, you or the trustee, if one is appointed, must allocate between you and the bankruptcy estate wages, salaries, or other compensation withheld income tax reported to you in Form W-2. A similar allocation is required for income and withheld income tax reported to you on Forms 1099. You must also include a statement that indicates you filed a Chapter 11 case and that explains how your income was withheld. Uh, Income tax reported to you on Forms 1099 allocate between you and the estate. So community property states. So I was talking about before, community property states have their own specific rules that you need to make sure. Community property states include Arizona, oops, get out of there, you. Arizona, California, Idaho, Louisiana, Nevada, New Mexico, apparently Mexico, New Mexico, Texas, Washington, and Wisconsin. If you and your spouse lived in community property state, you must usually follow state law to determine what is, what is state law. Let's see, is separate income. For details, see Form 8958, Publication 555. Nevada, Washington, California, domestic partners. A registered domestic partner in Nevada, Washington, or California must generally report half the combined community income of the individual and their domestic partner. So that's how the states do it. Rounding off the whole numbers. So oddly enough, I used to get questions about this all the time, about uh, rounding off to whole dollars. It says right here, you can round off cents to the whole dollars on your return and schedules. If you do round to whole dollars, you must round off all amounts. To round, drop amounts under 50 cents and increase the amounts from 50, 99 cents to the next dollar amount. For example, $1.39 becomes $1 and $2.50 becomes $3. If you have to add two or more amounts to figure the amount to enter on a line, include cents when adding the amounts and round off only the total. So yeah, if you're entering amounts included, cents, make sure to include the decimal point. There are no cents column on the form. Oh gosh. Line 1A. Hold on. Let me. Do 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 do. It's non-news. do 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 do. Okay. Okay. So line one. So now we're getting into the actual form. So all the previous instructions were just set up to how to actually file, right? So here we are actually getting into the lines. Total amount from forms W2 box 1. If a joint return also include your spouse income from if you earned wages while you're an inmate in a penitentiary institution, report these amounts on Schedule 1, line 8U. Do not report these wages on line 1A. See the instructions. So people that are watching this stream from prison, if you work, be sure to include these amounts on Schedule 1, 8U. Do not include them on line 1A. All right. If you received a pension or annuity from a non-qualified deferred compensation plan or non-governmental Section 457B plan is reported in Box 1 of Form W2. Do not report this amount on Form W 1040, line 1A. This amount is reported on Schedule 1, line 8T. Household employee wages not reported on Form W2. Oh, goodness, goodness. Ah, okay. Boop. Okay. Enter the total of your wages received as a household employee that was not reported on. Do, 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 do. It's unusual to be da, 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 da. Okay, so now we're on line 1B. Household employee wages not reported on Form W2. So this would be household employee. So people that work in your household but don't actually receive a W2 because they're not required. So like nannies, maids, au pairs, um, things like that. That's where they report Form 1B. Form 1C. Okay, now we're getting into tip income not reported on line 1A. So if you receive tips, that's not reported on you on Form 1040, line 1A. This should include any tip income that you didn't report to your employer and any unallocated tips shown in box 8 on your Form 10 W2 unless you can prove that your unreported tips are less than the amount in box 8. Also include the value of any non-cash tips you receive, such as tickets, passes, or other items of value. Although you don't report these non-cash tips to your employer, you must report them on line 1C. You may owe Social Security and Medicare on railroad retirement tax on unreported tips. See instructions schedule 2A, line 1B. Okay, so line 1, the total amount from your box 2, W2 box 1, that's usually where this gets reported. That's most people. But if your household employee wages, there you go, 1B, and then 1C is other tip income that's not being reported on the 1A. Okay, moving on to 1D. Medicare waiver payments not reported on forms W2 box 1. Honestly, I've never actually seen this reported anywhere um, in my professional practice, so I don't know. It's kind of interesting, but I guess it happens. If you and your spouse both receive non-taxable Medicare waiver payments during the year, you and your spouse can make different choices about including payments in earned income. See instructions, Schedule 1, B line 8S to see what the information is. line 1E. So we're still in line 1. Taxable dependent care benefits from Form 2441. Enter the total of your taxable dependent care benefits on Form 2441. Line 26, dependent care benefits should be shown in box 10 of your Form W-2, but first complete Form 2441 to see if you can exclude part or all of the benefits. Okay. Still on line 1, employer provided adoption benefits from Form 8839, line 29. So if you adopted somebody and you got employer provided adoption benefits, it should be shown in box 12 of your Form W-2 with code T. But see the instructions form for Form 8839 to find out if you can exclude part or all the benefits. You may be able to exclude amounts if you adopted a child with special needs and adoption came final in 2023. So it was still in line number 1. Wages from Form 8919, line 6. So as we get down the row here, we're getting into more and more specific situations. So enter the total wages from your Form 8919, line 6. Okay, line 1H. If you receive scholarship or fellowship grants that were not reported to you on Form W-2, report these amounts on Schedule 1, line 8R. See instructions for Schedule 1, line 8R. The following types of income must be included in the total on line 1H. So strike or lockout benefits, excessive elective deferrals. So that's if you overcontributed to like hold on, let me just read it. If the total amount that you or your spouse deferred more for under the plans for more than 22,500, catch up. Okay, so if you contribute more to a specific deferred retirement account, you just add it in there. So what they're talking about. Higher limit may apply to participants in 457. Okay, disability pension shown on Form 1099-R if you haven't reached the minimum retirement age set by your employer. Okay, corrective distributions from a retirement plan shown on Form 1099-R excessive. Okay, so line 1H, other income, in my experience, is kind of like the catch-all other income that should be on a Form W-2, but it's not. But it's not really anything else that's specifically outlined. It's kind of like a catch-all. There's another catch-all that I will get to. Line 1I, non-taxable combat election. So if you, come on, if you elect to include your non-taxable combat pay in your election earned income when figuring the EIC, enter the amount on line 1I. See the instructions on form on line 27. Were you a statutory employee? If you're a statutory employee, the statutory employee box on box 13 of the Form W-2 should be checked. Statutory employees include full-time life insurance salesperson, people, and certain agent or commission drivers, certain traveling salespeople, and certain home workers. Statutory employees report the amount shown in box 1 of Form W-2 on a Schedule C along with any related business expenses. Okay. Um, wait, what is that? Okay. Missing or incorrect Form W-2. Your employer is required to provide or send your W-2 to you no later than January 31st, 2024. If you don't receive it by early February, use tax topic 154 to find out what to do. Even if you don't get a W-2, you must still report your earnings. If you lose your Form W-2 or is incorrect, ask your employer for a new one. So I've In my professional life, I've run into that where employers, for whatever reason, give incorrect W-2s. Um, they do a math goof and provide the wrong information or provide the wrong social security number or whatever. It's usually with new employees or um, very limited um, payroll departments that they try to do manual calculations and it doesn't quite add up. So if it is wrong, just first contact your employer for a new one. And then if that doesn't work, then the IRS has tax topic 154 to talk about what you should do next. Tax exempt interest. If you received any tax exempt interest, including tax exempt original interest discount, this is line 2A. So now we're on line 2A. Such as municipal bonds, each payer should send you a Form 1099 INT or a Form 1099 OID. In general, your tax exempt stated interest should be shown in box 2. Box A, Form 1098, or for tax exempt OID box bond in box 2 of Form 1099 OID. And your tax exempt OID should be shown. So if you have tax exempt interest, line 2A, also include on line 2A any exempt interest dividends from mutual fund or any regulated investment. This amount should be shown on box 12 of a Form 1099 DIV, which is like dividends and interest, or dividends, sorry. Don't include interest earned on your IRA, health savings account, Archer, or Medicare Advantage, MSA, or Coverdell education savings account. Don't include any amounts related to the forgiveness of PPP loans on this line. So, I mean, it's telling you exactly what to enter in and what not to enter in because if we had so many issues. Okay, so we're still on line 2. Taxable interest. Each payer should send you a Form 1099 INT or a Form 1099 OID. Enter the total taxable interest on line 2B, but if you fill it in and attach Schedule B, and if the total is over 1500 or any other conditions listed at the beginning of Schedule B instructions applies to you. For more details about the reporting taxable interest, including market discount on bonds and adjustments for amortizational bond premiums or acquisitions on premiums, see publication 550. Interest credited in 2023 on deposits that you couldn't withdraw because of bankruptcy or insolvency of the financial institution may not have to be included in your 2023 income. For details, see publication 550. Line 3A, qualified dividends. So now we're on line 3. Enter total qualified dividends on line 3. Qualified dividends are also included in the ordinary dividend total required to be shown on line 3B. Qualified dividends are eligible for a lower tax rate than ordinary income. Generally, these dividends are shown in box 1B of Form 1099 DIV. See publication 550. So here we're already talking about Form W2, 1099R, 1099 INT, 1099 OID, and now 1099 DIV. But like I said before, and I keep repeating, that if you know how to read and follow instructions and you can do basic math, you can do the return by yourself because most likely do it by yourself because, I mean, it tells you exactly where to put the information and what the instructions to follow. So, yeah, it's pretty, excuse me, it's pretty evident. Okay, of course, there's an exception. Some dividends may be reported as qualified dividends, box 1B of Form 1099 DIV, but aren't qualified dividends. These include dividends you received as a nominee, see Schedule B instructions. Dividends you received on any share of stock that you held for less than 61 days during the 121-day period that began 6 days before the ex-dividend date. So, exceptions. So, there might be some exceptions. So, you got to read through and remember when you held the stock that paid out the dividends. Okay. Dividends attributable to periods totaling more than 366 days that you received or stock. Dividends on any share of stock to the extent that you are under obligation, including short stock. So, hold on. What is that? Why is that different? Oh, neat. Okay. 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 So dividends. You should make it. Dividends from a corporation that first became a surrogate foreign corporation after. Let's have it. After. Okay. So if it's a foreign corporation. Okay. So the example they give us, example number one, you bought 5,000 shares of XYZ Corporation common stock on January 8th. XYZ had a paid cash dividend of 10 cents per share. The ex-dividend date was July 16th. Your form shows $500 in box 1 ordinary dividends and box 1B qualified dividends. However, you sold the 5,000 shares on August 11th. You held your shares of XYZ for only 34 days of the 21-day period from July 9th through the 19th. The 120-day period began on yada 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 because you held no qualified dividends because you held for less than 61 days. Okay, so that makes sense. Okay, so example 2, the facts are the same as example number 1. Okay, that's helpful. Right. Um, except that you bought the stock on July 15th, the day before the ex-dividend, and you sold the stock on December 16th. You held the stock for 61 days, 63 days. The $500 of qualified dividends shown in box 1B are all qualified because you held the stock for 61 days of the 121 day period. So it depends on when you buy and sell the stock is when the dividends will show up or not, whether they're qualified or not. Okay. Tip: use qualified dividends capital gains tax worksheet or the Schedule D tax worksheet, whichever applies to figure your tax. See instructions for line 16 for details. Okay. Line 3B, ordinary dividends. Each payer should send you a Form 1099 div. Enter your ordinary dividends on line 3B. This amount should be shown on box 1A of Form 1099B or 1099 div. So here's where people always get mixed up for whatever reason. They receive a Form 1099 div, and in box 1, they should put on their tax return for box 3B. And then their 1099 div, that's 1B, they need to put on 1 or 3A. So it's backwards, but for whatever reason, people get that mixed up. Let me see. Let me copy that. Let me do 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 do. Accept. Okay, let's see. Well, let me do some research real quick here. Okay. How do you think? positive. Let's see. Oops. Oh, dude. Um, let's see. Go here. Website. Uh, do, 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 do. Do, 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 do. What's going on here? What's going on? Okay. Oops, you go over there. And let's see. There we go. Okay. Okay, so we talked about dividends, both ordinary and qualified. Uh, so when we get into non-dividend distributions, so dividends that are non-dividends or distributions that are non-dividends, we'll get into that here. Some distributions are on a return of your cost or other basis. They won't be taxed until you recover your cost or other basis. You must reduce your cost or other basis by these distributions. After you get back all your cost or other basis, you must report these distributions as capital gains on Form 8949. So what they're saying is that if you make an investment and you just talk about the return of what you invested, you're not really, that's not income, you're just getting your money back, is what they're trying to say. Dividends on insurance policy are partial return of the premiums you paid. Don't report them as dividends. Include them in income on Schedule 1, line 8Z, only if they exceed the total of all net premiums you paid for the contract. So once again, they're talking about return of money versus actual income. Okay, now we're finally getting into line 4A and 4B. This is probably by far where I get the most questions. If Yeah, but let me take a break. I need to go check the door again. Oh, okay. So, oh, he's so sweet. Okay, you wanna be? Oh, look at you. Oh, you're so sweet. Okay. Wait, what is going on? Did I freeze? Did you freeze my stream? Did you? Oh, you're so sweet though. Look at you. Oh, you're so sweet. What are those? What are those? Okay, go on. Go do cat things. Very important cat things. All right. Um, let's see. What is it's unusual to do quietly do 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 do. Do do do. Okay. Well, I think it's been quite a few hours, so oh, I think that's enough. Let me just save. Thanks everyone for watching. So let's go ahead and end. Yes.